Good morning. This is Larry McMillan with a stock market update on, Tuesday, February 21st, after the 3-day weekend. The market is struggling today, and it is looking like it might break down below 40.60, which would be a new low for this month. And while that might not seem too significant, it is significant in the fact that we broke on the upside early in the month, and now we're talking about breaking on the downside, which means that the upside breakout would be a false breakout if that were the case. Typically, false upside breakouts, especially when they occur in bear markets or at the beginning of a new downward phase, are very significant. And so this should not be treated lightly. There is resistance all the way up to that 4,200 level that we saw early in February. And on the downside, there are a couple minor support levels as we decline, but the next major support level is 3,900. And then the December lows at 37.60 would be after that. If those are broken, I would say we're definitely back into a full-fledged bear market. The equity-only put-call ratios are still on buy signals, although the weighted ratio has declined so far that it's below the levels where sell signals were given last April and August. So we're waiting for that to roll over and begin to rise. That would be another sell signal there. We're already getting sell signals from our breadth oscillators. And of course, we have the McMillan volatility band sell signal, which has been in place for a couple of weeks now. The new highs versus new lows indicator, though, that's still bullish. New highs are rampant, and that's the one indicator that's still staying strong, not showing any signs of weakening. VIX itself is starting to rise, and depending on where it closes today, it could return to spiking mode. I believe it's something like 2163 would return it to spiking mode. If it's in spiking mode, the market can suddenly fall quickly. Eventually, it does lead to a spike peak buy signal, but that can be as long as 8 to 10 trading days out. And so this would be a negative if it were to occur. When VIX enters spiking mode, another thing that we then pay close attention to is the term structure, and in particular the relationship of the March and April VIX futures. Those are the two front months. If March were to rise above April, that would be another big negative. That hasn't happened yet. So all in all, things are looking much more bearish than they were. And we are going to reestablish a core bearish position if SPX closes below 40.60 today, Tuesday. Meanwhile, I invite you to visit our website, take a look at some things. We have a very interesting page, too, celebrating the 50th anniversary of option trading, some interviews and articles by people who were there at or near the beginning of that trading. Anyways, have a great week trading.